Hello everybody and welcome to FinTech Futures. We are here today at day 2 of FinovateEurope here in London, UK. My name is Tyler Paith. I am a reporter at FinTech Futures, and today I'm very happy to be joined by Georgina Merhom, the founder and CEO of Solo. Georgina, how are you?
Good.
Fantastic. You did your demo yesterday, is that correct? How did that go?
It was good.
Yeah.
It was very exciting.
Was it a quick 7 minutes or a short 7 minutes?
It was a very quick 7 minutes.
Yeah,
Yes.
yeah, I bet.
We have a very complicated offering, so 7 minutes was tough.
Yeah, I did get a chance to see a few of them underway, and it was all very quick. In terms of Solo, we're here to talk about your business, Solo, very exciting. Maybe you can tell us a little bit more about Solo, where it's based, what its origin story is, and most importantly, what's its mission in the industry?
So Solo is a data infrastructure startup from New York, and our mission is essentially to build a credit bureau that not only helps financial institutions manage their risk, but more importantly helps them assess and identify opportunity and broker trust between new emerging businesses and the financial institutions.
So you've come here to demonstrate Solo's solution with all of the industry's eyes upon you. Maybe you can tell me a little bit about how the standardizing of financials benefits both the capital allocator and the business.
Absolutely. So I'd like to answer that question by first taking it back to how things currently work as a status quo. So currently, when a customer applies for a financial product at a bank, they typically will self-report their information, and then there's a third-party credit check that happens. Now, the self-reporting costs banks just in the US alone $29 billion, and it costs 6 to 8 weeks in loan officers processing applications just to verify and standardize those financials. When we talk about verification, we want to make sure that the accounting reported by the customer matches whatever's happening on a cash basis in the bank accounts, because that's the only way to verify it today. Yeah. So typically you'll have those self-reported books and some bank statements, and then a lot of cross-checking that happens. And then the third-party credit bureaus essentially just says, this person pays their bills, this person doesn't, good, bad, poor, excellent, and that's it, right? What we are reimagining here is a system where you have first-party data collection that is connected directly to operating systems. What that means is when a customer applies for a financial product and Solo is embedded in the process, instead of asking them to self-report, you would essentially trigger an SDK, which would be like a pop-up that says, hi, can you please connect your accounts? And then it would trigger them to connect their bank accounts, their billing systems, their payment gateways, maybe even their accounting systems. And what would happen in the background is you would then go to the bank, and this happens once just during onboarding, and you would ask them, how do you want things calculated? So do you want inventory if it's verified by Amazon, for example, because Amazon's handling fulfillment? Do you want that on the balance sheet as an asset? Do you want gift cards, when they're purchased online? Do you want that to be on the profit and loss as income, or do you want it as a liability because it's unearned income and it's still, there's something owed to a customer here? And so all of these calculations and custom ways of reporting are decided by the banks, and then you have the raw data directly from the source mapped to that, and then the bank can use that to make decisions. We think that a lot of the data reported by the credit bureau maybe is useful for understanding risk, but it doesn't give you a full picture to understand opportunity that might otherwise be missed or completely overlooked.
That's really interesting that you're sort of tapping into this process, which for throughout sort of its legacy has encountered so many roadblocks. You know, in terms of who your solution is targeting, you say that your initial target audience really is small businesses. Why was that a decision that you made?
So just to clarify, we service financial institutions. Their end user or their end customer would be a small business. And the reason we chose to kind of, build the product optimized for small businesses is we think that, first of all, 50% of the economy currently is considered an SMB. And it's when you say SMB, some banks don't even know that some of their customers are SMB, because SMB goes, there's actually only 5% of SMBs in the US, 33 million businesses, and only 5% of them are employers. So when you think of business banking or small business banking, it's actually a much bigger segment than you would assume, and it doesn't always look like the kind of business you would think of when you think business. We're talking about digital freelancers, we're talking about digital content creators, we're talking about people with side businesses, we're talking about people that are traditionally employed but maybe consult, right? We're talking about it's a very big and it's a growing segment, but more importantly, it's the fastest changing. So it's not only the fastest growing, it's the fastest changing. And the opportunity we saw with the fastest changing sector in our economy is to be able to standardize their financials so that the banks can keep up. Because currently, just when the banks think they can underwrite an e-commerce merchant and they've worked so hard to build a product specifically for that, we're on to the next thing. And there's digital assets, or there's all sorts of things. And so we chose SMBs because we think it's a great emerging opportunity that the banks should capitalize on. And then also it just happens to be very compatible with how we're building things, because there's so many internal operating systems that small businesses use that we can pull data from, and data that is completely missed by the credit bureaus that can help us identify opportunity. The other thing is, and the last thing that's really important, is small businesses have so many different ways of doing their accounting, and so it costs banks a lot to try to standardize and verify those financials, because you don't know if it's accruals based, if it's cash based, you don't know how operating income is calculated, whether depreciation is in the mix. You have no idea how that, SMB is calculating their financials. And so the pain point is much bigger than for retail and consumers, because with retail and consumers, they get their payroll once a month, and then they have their financial patterns. So it's much simpler and doesn't require a solution as complicated.
Yes, I see what you're saying, but to take it back to that element of trust and fairness, with financial data, it's obviously hugely complex. How can Solo ensure that the outcomes that it produces are both accurate and impartial?
So the way that we ensure accuracy is we get the small businesses to actually log into their operating systems. So, if it didn't happen if it's not an immutable source, we don't process it. And that really helps drive trust between businesses and the banks. And then in terms of impartiality, when you have a calculation that is then applied to 1 million businesses the same exact way, that in itself levels the playing field, because you're relying on the data to advocate for the customer, as opposed to the customer trying to get you to believe that they have stable revenues, or that they're growing, or anything else, right? So when you have the data broker the trust, you no longer have to rely on the customer advocating for themselves, or the banker kind of, being able to reason with them.
In terms of working with financial institutions, these are institutions with a lot of processes at play. When they tap Solo's solution, what can they expect from the integration process and the sort of service management procedures that you introduce?
So we have a 13-week pilot program, and the purpose of the pilot program is to really identify what is it that the bank is trying to optimize. So we have 6 metrics that we track. I won't bore you with them, but the long story short is that we're trying to increase revenue per SMB customer, and then we're trying to reduce the number of hours and the cost to process applications. And we always talk about having, the application to decision process go from months to minutes, and we really stand by that. And during the 13-week implementation process, we actually measure it within the first 13 weeks. And if there is no, substantial improvement, then no commitment. And so we think that's very important for us to be able to build trust with the institutions.
A little bit of try before you buy, really.
Absolutely,
Yeah, I think that's really fascinating. I mean, in terms of fascinating, this has been a fantastic conversation to have with you, Georgina. I've really, really enjoyed speaking with you and learning more about Solo Solution. In terms of a business with so much momentum and potential, what can we expect Solo to do in 2024 and beyond?
Solo is building towards becoming the first credit bureau that commoditizes first-party data. The credit bureaus today are not reporting on any of the data that we think is relevant for the next generation of both businesses and consumers. We think that the data is widely irrelevant. We also think there is room to commoditize first-party data, both for decisioning when it comes to financial institutions, but also be able to reward consumers for providing access to that data to the credit bureau.
And in terms of what those rewards would look like, can you tell us a bit more about that?
People would get paid for their first-party data, which essentially paves the way for a universal basic income. And there's been several attempts by consumer startups to accomplish this. And we think the issue with that is they're not in a position where the data they collect is used for a decision. And so it's great, it's proven that users are willing to authenticate access to their first-party data and essentially sell it to decision makers. The issue has been that the people that are attempting to sell that data are just not able to leverage it for decision making. And because of our reporting engine and the fact that we've already commercialized our product and we know that banks are going to pay for it, we think that credit bureaus are the best positioned to commoditize first-party data and pave the way for universal basic income.
That universal basic income element, I think, is really, really intriguing. And it'll be very, very interesting to see you at Finovate again next year to discuss how those plans have come into fruition. But Georgina Merhom, the founder and CEO of Solo, it's been fantastic to meet you. Thank you so much. Thank you to all of our viewers online. And if you'd like to find out more, please head to fintechfutures.com. Until next time, I'll see you soon. Thank you.